History suggests it would be highly unlikely for the S&P 500 not to retest the March lows given the signs of the recent drawdown and the fact that a recession is now underway. Since the VIX peaked and the S&P 500 bottomed in mid-March, the VIX has been falling at among its fastest pace on record. However, based on history and given the current level, to many this suggests the VIX futures are likely pricing in a new stock market low in the future. So, let's take a look. Is the worst behind us? No one knows for sure. However, this chart from Torsten Slok, chief international economist at Deutsche Bank Securities, pairs the infections of the coronavirus by growth rate and the VIX, which is one of Wall Street's most closely followed indicators of volatility. This chart implies that both the health crisis and market volatility may have peaked. For those of you that are new to this channel, the VIX, or the fear factor, is based on option contracts in the coming 30 days that are pegged to the S&P 500. I use the VIX as a contrarian indicator because it tends to rise when stocks are falling and decline as the market rises. As indicated, Slok's chart shows that the number of countries with a growth rate of coronavirus infections that are higher than 5% signals that the virus, which has infected more than 3 million people worldwide, may have reached a peak in late March or early April. To me, this chart is not all that comfortable since the VIX still remains elevated above typical levels. And as I warned last week, the VIX is trying very hard to base. If it does, and then is able to move higher, we have more stock market volatility. So be prepared because I think there is a good possibility that just may happen. So let's take a look at the current chart of the VIX. And now we're looking at the daily chart on the VIX using stockcharts.com. And last week we were talking about the VIX trying to bottom in this area here, but with some pretty good earnings reports from some of the tech companies, the VIX slid down further. But as you can see, it's starting to consolidate in this area here and attempting to base once again. And that perhaps is more clear here with the MAC. The top, the fast line, came through the slow line on its way down here. As you can see, it bottomed. It attempted a move up through the slow line, but got reflected back down. So now here it is, much closer. The fast line is much closer to that slow line, and it's also near the zero line. And as you can see, it's not going to take much for that fast line to come through that slow line and head on up. If it does head on up, it's going to cause some volatility. It just depends upon how sharp that rise is and how strong that VIX moves on up. We're going to have to wait and see. But again, continue to monitor the VIX, continue to be cautious and prudent because I think volatility is on its way. How much? We won't know until this evolves a little bit further, but we'll continue watching. And for today, that's ChewDog Charts. Thank you.